What's going on, guys? It's Andy here. Welcome back to the Andy Kandola Show. So I got a good video for you guys today. I'm going to go to share with you guys 5 stocks that I'm heavily going to be buying as we get into next year. Now, these are stocks that are both in growth and in dividend growth categories. But if you are new to this channel, guys, I do focus on my bucket list portfolio, which is my primary portfolio. Within this portfolio, I'll share with you guys an update as well as 5 stocks that I'm heavily going to be buying into next year and my reasoning behind those stocks. Now, as far as this portfolio goes, I have dividend stocks within this portfolio as well as I have growth stocks. I do have this portfolio broken up into the 11 different sectors within the S&P 500. So these are all the different sectors that I have within this portfolio, as well as I have a pie for my growth stocks as well. Now, here's the thing. As we get into next year, I do believe that value stocks are going to go ahead and rebound, but I do also think that growth stocks are still going to keep going up. A lot of people and a lot of analysts are predicting that growth stocks are going to go ahead and level out, but I do believe that growth stocks are still going to keep on growing into next year. So I do like to go ahead and diversify in both of those different categories. Now, in regards to this portfolio, the current value in the portfolio is $90,629. I do have a gain today of $388. Now, just in this last week, the portfolio is up about $484. Now, the market is open, guys, so that's why there'll be fluctuations within this portfolio as I go through this video. But overall, it's nice to see the portfolio up in the last week. In the last month, the portfolio is up $3,357 or 4%. So I'm very happy as far as what's going on in the stock market. Now, if we go ahead and look at the last quarter, the portfolio is up $10,379 or 14.73%. And then overall in the last year, the portfolio is up $13,577 or 29.97%. So almost 30% gains in the last year. Now, if you're new to investing, I like to focus on dollar cost averaging. So as I shared these 5 stocks with you guys, my goal with these stocks is to go ahead and put away a certain amount of money every single week and split it up between these 5 stocks. But these are going to be the main stocks that I'm going to be heavily buying as we get into next year. Now, jumping into the first stock, this is going to be in my technology sector, and this is going to be Apple. Now, here's the thing. Apple is actually one of my biggest holdings within this portfolio, but this is one of the strongest ecosystems out there, and I believe that the stock's just going to keep climbing up into next year because Apple has announced a couple new products just in the last recent weeks here with the AirPods Max as well as with the Fitness Plus. Apple's really going ahead and getting into different categories, and they have money coming from many different categories at this point, like their iPhone. They just announced the iPhone 12, like the iPod and their laptops as well. Now, here are some other rumors as well. Apple may also be working on a car. So there is definitely rumors out there that Apple might be working on a car. Now, because of that, the stock price did go ahead and go up over the last week. If we just look overall at the last 5 days, the stock jumped about 2.46%. And then overall in the last week, the stock jumped about 15 points. Now, overall, guys, in the last year, the stock is up 84%. But the nice thing that I also like about the stock is they do pay out a dividend as well. With Apple, they currently are paying out a dividend of 0.63% or an annual payout of 82 cents. Now, Apple has consistently been paying out their dividends for the last 9 years since they started paying out their dividends, as well as overall in the last 5 years, they've been growing their dividends by 10.5%. So this is a stock that I'm actually a huge believer in all time. If we go ahead and look at Apple as far as within my portfolio, the current gains that I have in Apple are $3,259 or I'm up 73% in the stock. So this is overall my biggest stock within my portfolio, but this is one that I'm just going to keep on investing in the long term. Now, let's go ahead and jump into the next stock, which is actually going to be in the communications sector, and that's going to be Disney. Now, here's the thing with Disney. In my current portfolio, I have $1,881 in value. I have a total gain of $440 or a total return of 98% in this stock. Now, guys, with Disney, if we just look at their overall returns over the last 1 year, they're up 19%. If we look at the last 5 years, this company is up 64%, and then last 10 years, they're up 360%. Now, my bullish case on Disney is because of their streaming service. If we just go ahead and look at the last month, the stock has jumped by 14.68%. And a lot of analysts now are saying that they're projecting Disney to be over a $200 stock. And that's because with their streaming service, which they started in the last 1 year, they have over 80 million subscribers at this point, and they're growing faster than Netflix. With the current projections, Disney is actually projected to go ahead and have over 300 million subscribers by 2024. So I'm very bullish on this company, and with Disney Plus, basically you can go ahead and watch shows like The Mandalorian, and I'll tell you guys, that's a recent show that I watched. The production on that show is second to none, and Disney has a lot of different characters that they can go ahead and make different shows around, or they can go ahead and start releasing all their movies on Disney Plus if they wanted to go ahead and do that. Plus, because they're diversified as far as how they make income through Disney Plus, through the theme parks, through their cruise lines, they have many different ways that they can actually go ahead and build additional income. So this is going to be the second stock that I'm going to be heavily investing in 2021. Now, let's go ahead and jump into the third stock. The third stock is going to be JP Morgan Chase. Plus, the other thing with Disney that I really liked about them was they used to pay out a dividend as well. Now, Disney did recently stop paying out their dividends because of the pandemic. This company really did take a hit because a lot of their ways that they were making money, like their theme parks or their cruise lines, did shut down. But this is a stock that I believe will go ahead and have their dividend come back once they actually start becoming more and more profitable. So this is a stock that I'm basically going to be looking to hold on to for at least the next 20 years. But now let's go ahead and jump into the next stock. The next stock in my portfolio that I'm going to be heavily investing in, and this is the third one, is going to be JP Morgan Chase. Now, JP Morgan Chase is the largest financial institution out there. My current value in this company is $2,312. The total gains is $382, or I'm up about 50% in this company. But if we just look at JP Morgan Chase, in the last week, this company actually went up over 4%. And that's because JP Morgan Chase just announced that they're going to be doing a $30 billion buyback, which is going to take place throughout 2021. Basically, this company is about to buy back $30 billion in their shares, meaning there's going to be less shares outstanding and the stock price should go up. But hey, that sometimes is already part of the stock price. So their stock did go up about 5.4% when this article came out. But that's the thing with JP Morgan Chase. I love this company when you go ahead and look at the financial sector because they are the innovators in the banking sector. With JP Morgan Chase, I can tell you guys just based on my prior experience working in this industry, they are on top of their technology when it comes down to banking. Plus, they're very well diversified. They have different ways that they go ahead and make money through their wealth management services, through their checkings accounts, investments, credit cards, home loans, car loans, business loans. I mean, they have many different ways that they focus on really making money. Plus, guys, if we go ahead and look at this company, they actually do pay out a dividend as well. With JP Morgan Chase, they've been actually consistently paying out their dividends for the last 10 years. Plus, if we look at their dividend yield, they're currently paying a dividend of 2.89%. So you're making money through the dividends in this company, plus you're making money with the potential in the price of the stock. So that's another reason why I am going to be investing in this company, and this is going to be my largest company within my financial sector. Now, jumping into the fourth stock. Now, the fourth stock is going to be actually a brand new stock that I just started investing in, and that's going to be a company called Lemonade. Now, Lemonade is a company that I have within my growth portfolio or within my growth pie. But this company is basically trying to disrupt the way that we do insurance. In my current portfolio, the current value of Lemonade is $811. I am up in this company. I actually just started investing in this company in the last couple of weeks, but I'm up $38 or 6.29%. But now, if I show you guys what this company does, they're basically one of the companies that actually was able to go ahead and get through the New York State regulations for insurance. And I can tell you guys, based on my experience in this industry, New York State is one of the hardest regulatory municipalities to go ahead and get through, to go ahead and get licensed in New York State to go ahead and sell insurance products. So basically, this is one of the hardest places to go ahead and actually be able to sell insurance, and Lemonade was able to go ahead and do that. But currently, guys, Lemonade focuses on selling home insurance products, renters insurance, pet insurance, and recently they are actually going to be announcing that they're also going to go ahead and get into life insurance. And I can tell you guys, one of the biggest buckets that Lemonade is not even touching yet is going to be car insurance. And once they get into that and they can figure out the algorithms behind keeping their price competitive, this company has a long ways to go ahead and grow. So I am investing in this company. This is a new company that I started, but I'm going to be heavily investing in 2021 because I believe this company can go ahead and disrupt the insurance industry. But guys, this is going to be the fourth company that I'm heavily going to be investing in. Now, the fifth company is going to be a newer company that's going to be within my growth pie. And this company I've done pretty well with so far, and that's going to be Peloton. Now, Peloton, as far as my current portfolio goes, I have a current value of $3,577 in this company. I'm up 88% or $1,072. Now, here's the thing. I believe Peloton is an ecosystem that's just growing. And guys, with the retention rate, Peloton actually has some of the highest retention rate with their subscription model with their app. If we look at their 1-year retention rate, they actually have a 96% retention rate, which is awesome. I mean, 96% of people that are signing up for their service are not canceling their service. So that's a very strong retention rate. I do believe that Peloton is going to be one of the strongest ecosystems when it comes down to fitness and when it comes down to that category, because they're doing a good job with their branding. Plus, they're actually going to be going ahead and diversifying into other product lines down the road as well. Peloton actually recently just acquired Precor, and Precor is one of the largest companies out there when it comes down to fitness equipment. So this to me was a really good acquisition for Peloton, and basically what this is also going to go ahead and allow is it's going to allow another 625,000 square feet of manufacturing, so Peloton can go ahead and make more products quicker. And I believe that this is also going to go ahead and allow Peloton to go ahead and get into other fitness equipment that they can go ahead and focus on making part of their ecosystem to go ahead and just grow within the sector. So this is a stock that I'm very bullish on. If we look at the last 1 year, the stock is actually up 465%. If we look at the last 6 months, they're up on 192%. And then if we just look at the last week, they're up about 18%. But guys, these are basically going to be the 5 stocks that I'm going to be heavily investing in 2021. And basically stocks that I'm planning to hold on to for the next 20 years. So hopefully you guys enjoyed this video. If you want to go ahead and keep up with this portfolio and learn more about the stock market, go ahead and subscribe to the channel down below. My focus is to basically take you guys on this journey, share with you guys how I like to go ahead and invest in the stock market, take all my experience that I have for investing in the stock market for over 15 years now, and share it with you guys on this platform. Plus, we'll go ahead and see where this portfolio goes, and I'll be fully transparent with you guys throughout this journey. But thank you guys again for watching this video. If you are new to investing and you want to go ahead and take advantage of M1 Finance, I do have an affiliate link down in the description where you can go ahead and get $10 just to go ahead and sign up and start an account with them. But thanks again, guys. I'll see you guys at the next one.